the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for today. Well, Singapore shares rose to buck regional movements. So if we look at the Straits Times Index, it was up 0.26% at 4,227 points at about 2:23 p.m. Singapore time, and we're looking at a value turnover of 825 million Sing dollars seen in the broader market then. But let's take you through the closing numbers. As we shared with you earlier, the STI ended in the green as well, up 0.08% at the end of the trading day at 4,219 points. Now, in terms of value turnover, that's 1.49 billion Sing dollars. Gainers outnumbered losers 277 versus 256. Top advances for today, we've got for you Jardine Cycle and Carriage, Hong Kong Land USD and UOB. And top decliners, we have here GMX USD, iFast and Soy Built Construction. Now, in terms of counters to watch, we have CapitaLand Investment, because the global real asset manager said yesterday that it will provide retail advisory services to Malaysian property developer Astaka for a new mixed-use project in Johor worth 1.2 billion Malaysian ringgit or 364.5 million Sing dollars in gross development value. Now, elsewhere, from how prices on Grab briefly jumped about 100 times from the usual rates to how shares of Pop Mart International Group rose to a new record on the back of news of a new mini Labubu toy. We've got more corporate and international headlines in focus. And joining me on the line today is Too Jun Cheong, dealing manager from Moomoo Singapore. Jun Cheong, welcome back to the show.
Hello, Tian Tian. Thanks for having me.
A lot to talk about today, but Jun Cheong, let's start with global markets this time around. We saw a tech rout overnight. Several major tech firms losing significant market share there. We're talking about Nvidia, Palantir, and Oracle. How would you read into overnight movements, and how far has that filtered through to Asian markets today?
Indexes-wise, the Nasdaq Composite fell about 1.46%, while the broader S&P 500 fell 0.59%. Meanwhile, the Dow Jones Industrial Average actually touched a new record high. So much of the fall, like you mentioned, was due to the mega cap tech as well as the chip makers. So while market participants were looking at the Jackson Hole Symposium, I personally feel that the fall in the markets yesterday were not due to the symposium, but a rather normal correction in the market, especially since the market is already pricing in the potential cut on September. So valuations of all these big tech and chips makers are currently being evaluated by investors after the AI run. And the small correction yesterday could be seen as healthy for the market in the long run. So over in the Asian market, we have like your Korean Kospi, Japan's Nikkei 225, Taiwan TaiEx. They follow the US market and then they all close in the red, whereas we have like Hong Kong Hang Seng, they close up in the green. So markets that has been closely connected to the US tech and chip makers all fell in tandem. For example, Taiwan TaiEx as well as TSM. But markets with less correlation suffered lesser, for instance, like our Singapore market, which closed rather flattish.
And speaking of the Singapore stock market, I think you might have somewhat addressed it, closed flattish. But how would you read into movements relating to STI for much of today, and also when it comes down to the biggest movers? Any surprises there?
So, like I mentioned, the Straits Times Index closed off slightly in the green today, and the top gainer today was Jardine Cycle and Carriage, being the top gainer for 2 days in a row. Overall, the Singapore market, they did not react too negatively to the drop in the US market last night. However, some sectors were certainly impacted. So some counters like your UMS, your AEM, they also fell in today's trading session, bringing the fall in the tech and chip making in the US as well as the regional markets as well. From a technical standpoint, at least for today's top gainer, Jardine Cycle and Carriage, it is actually on the bullish continuous triangle with the volumes really surging past the last 2 days. So with the dividend yield of about 5%, I guess the long-term investors could be riding this trend while enjoying the rather attractive yield.
And Jun Cheong, let's talk about CapitaLand Investment. Earlier, we talked about how it said yesterday that it will provide retail advisory services to Malaysian property developer Astaka for this new mixed-use project in Johor worth 1.2 billion ringgit in gross development value. How significant of a move is this for CapitaLand Investment?
So CapitaLand Investment, the stock closed off about 0.37% in the green today after the announcement with Astaka. So overall, the move is not super significant for the group, but it does add value to the books for CapitaLand Investments. And why it's not super significant is because the global portfolio is over 100 billion already. So this revenue, while not be much significance to CapitaLand Invest, it does bring about something else, which is to really strengthen their footprint in Malaysia, which could bring possible future collaboration in the region. This is especially so as the Johor Singapore RTS begins to start next year. I guess investors would see this more as a long-term brand and network expansion exercise rather than a material earnings driver. But in the bigger picture, it does align well with their goal to diversify fee-related income and the positioning for the company on its growth beyond its traditional markets.
And Jun Cheong, let's also talk a bit about Lam Chang Creations. The firm's profit guidance out yesterday revealed that it is expected to report a significant improvement in its profit before tax for the full year ended June 2025. What do you make of the latest news?
So this is also another stock that has gained significantly over the last 2 trading days. It closed off nearly 10%, and then before closing off at went up to about 10% before closing at 8.99%, and this was after a 7% gain yesterday. So since its IPO, Lam Chang Creation actually rose about 60%, bringing its market cap to above 150 million. So I guess the latest news spells really great news for the construction and property sector, especially since they had a challenging past few years. This could also be a sign of a margin recovery or better cost management. So I guess investors will be watching whether this momentum is sustainable and if it could translate into stronger dividends or even a new project wins.
And have you taken a Grab ride today, Jun Cheong?
I did not, and I'm glad I did not.
Okay, and the reason why I'm asking this is because Singapore ride-hailing users, they got a shock today. Prices on Grab briefly jumped around 100 times or 100 times from the usual rates. Short trips are now costed $1,000 or more, and Grab attributed the elevated rates to a temporary display glitch, which has since been rectified. But do you expect any knee-jerk reaction by investors today?
I do not expect much reaction from investors due to the slight glitch, but rather I expect a lot of internet memes to be popping out because of this Grab glitch.
Yeah.
So Grab itself, thankfully I didn't take it today, but the share price of Grab has gained about 7% this year. And it has been trading range bound between the $4.70 to the $5.20 range for months now. Volumes for Grab actually has been increasing, albeit a bit slowly. But we have seen a lot of recent institutional flows into Grab. So on the filings from 30th June this year, we have your likes of Morgan Stanley, JP Morgan, UBS, Goldman Sachs. These are just some of the names that have actually added positions into Grab. Of course, it does look like it's a period of accumulation. However, the resistance for Grab has been pretty strong, and it has not been able to break out from it. Personally, I think the biggest news for Grab would be the confirmed acquisition of WeRide, which will allow them to integrate autonomous driving technology into Grab's fleet. Of course, there's the other side of the argument where will be the labor cost for such autonomous driving, because autonomous driving is typically good when the human capital is expensive. So in your likes of like Europe, North America, where there's a lot of excitement about it because the cost is so expensive there. However, in Southeast Asia, where I would say human capital is typically lower, such investments into autonomous driving may not bring about the massive cost savings when compared to our Western counterparts. So this is, of course, on the revenue part of things, but I believe that the project would work out for Grab, and it will be a driver for the company in terms of both forward earnings as well as the share price.
Now, if you're just tuning in, we're now in conversation with Too Jun Cheong, dealing manager from Moomoo Singapore. Across the region, Jun Cheong, we must talk about toys and Pop Mart in particular. Now, we've heard of iPad mini, but now Labubu mini, or mini Labubu, if you will. And part of the reason that sent shares of Pop Mart International Group to a record today, because its founder and CEO Wang Ning said that Pop Mart could easily surpass its annual sales projection. He also announced plans to launch this mini Labubu in a post-earnings briefing. How significant is a new Labubu mini for investors? Do you think there's more room for Pop Mart to go or to maneuver when it comes down to developing new IPs?
So I guess the Labubu as well as the new mini Labubu, it's likely going to be a hit among shoppers since I guess it will potentially look cuter. And I would say that the mini version is significant because it expands the customer base for Pop Mart. Mm-hmm. So minis are usually more, I would say, affordable, although I'm not sure about the price. Mm-hmm. And they're also easier to collect, which really broadens the demand beyond the really hardcore collectors into more casual buyers. That really helps Pop Mart to drive volume growth while still leveraging on its most popular character, which is Labubu. So Pop Mart's ability to refresh its intellectual property pipeline is critical in this toy and collectibles market. Personally, I have not bought any collectibles. But even then, I've actually not bought any. I walk past a lot of the stores. But even then, Pop Mart was able to catch my eye very recently on one of their latest offering, which is from the Japanese animation One Piece, which I've been a fan of. Yeah, so I guess I can use myself as an example of someone that does not collect such collectibles. And their ability to constantly refresh a lot of their IPs will only continue to attract new customers and really further improve their financials and revenues, especially as when we know that the profit margins for such toys are humongous. So short-term wise, I guess the new Labubu will certainly support the share price. As we have seen today, it has closed off about 12.5% higher. On a longer-term basis, I guess investors would continue to watch how well the company diversifies its offering from the famous Labubu to the Molly and to the one that I'm talking about One Piece, to improve their IP to cover more market share into the untapped segment or to the new casual buyers. And of course, the Chinese market has also recovered well this year, and such earnings announcements by Chinese companies will really help to propel the share prices further when interest in the markets are already starting to shift towards the Chinese markets.
I suppose it might be worthwhile to swing by one of the outlets to look at the offerings, the lineup, and also the queues at the cashiers and how fast it's ringing as a leading indicator, if it will. But further away, Jun Cheong, before we wrap up the conversation, let's talk about Xiaomi and how it intends to sell its first EV in Europe by 2027, declaring plans to take on Tesla and BYD globally. Any quick thoughts on this one?
So I guess Xiaomi's announcement to sell the first EV in Europe in 2027 is, I'll call it a bold move. Especially, like I mentioned, they only entered the EV space last year with the SU7 sedan. The model did draw a lot of orders within days, showing a lot of consumer interest. So I guess for Xiaomi to look into Europe, it shows that they are confident in scaling up beyond just selling in China itself. However, now Europe is one of probably the toughest EV battlegrounds for Xiaomi because they have Tesla, which is they have strong brand recognition, they have established charging networks, and then we have BYD, which has already started shipping very competitively priced EVs into Europe. And then again, for Xiaomi, they also have to think about the traditional European car makers like your Volkswagen, BMW, Mercedes, who are definitely looking to defend their own turf. So I guess where Xiaomi can stand out in this ecosystem, where they can stand out is actually in their ecosystem. So they already have a massive number of people buying to their smartphones, installing their smart home. There's a huge number of users. If they can position the car as an extension of this kind of digital lifestyle, so where your phones, wearables, and even home appliances integrate into the driving experience, maybe that can create a unique selling point compared to their competitors. I guess pricing will be another level for Xiaomi.
Okay.
Xiaomi has a reputation for delivering good quality at affordable prices. So if they can undercut their European counterparts while adding smart features, they could carve out a niche. So I guess when I compared it to Tesla, which builds on brand and technology, BYD, which pushes volumes and cost leadership, Xiaomi is trying to blend affordability with its ecosystem integration. However, I would say it's a long play. Investors shouldn't expect much meaningful revenue until after 2027. But it does show how aggressively the Chinese tech firms are thinking globally when it comes to EV.
Thanks so much for the insights, Jun Cheong. That was Too Jun Cheong, dealing manager from Moomoo Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.